Hey everybody, it's Ryan and Lee Bratcher here with TBC Live. This is a new thing we're going to be doing weekly where we're going to be breaking down current trends, current topics that have to do and have an impact on Texas innovation, specifically for Texas Blockchain Council. Who is the Texas Blockchain Council? The TBC is a nonprofit trade organization for the betterment of Bitcoin, blockchain, fintech technologies within Texas. I'm Ryan. With me, President of Texas Blockchain Council is Lee Bratcher. Welcome to TBC Live. There we go. We got to get your disclaimers in there. All right.
Like that.
Yeah, you got to have the disclaimers, right?
And we showed it for like 4 seconds or so nobody could read it, but at least it was there.
So one of the main reasons I wanted to do this with you is the community aspect, because with the TBC has a large impact, has the ability to connect with a lot of people, but it's so segmented. You've got your Twitters, you've got your Facebooks, your LinkedIns, the Twitter Spaces. They're all over the place, and there's really not a community. And from my previous experience, hey, start doing some live streams, get people engaging in the comments. You know, that's how it starts.
No, it's good. That's not my wheelhouse, so I'm glad you're pushing me to do this.
So how this will work is I will basically give a brief summary of a current topic or trend that has some sort of effect on the TBC or Texas Innovation. That'll give you an opportunity to respond, kind of break down how that works, how that affects Texas innovation, blockchain, Bitcoin, etc. If I have any questions, my job is to be the advocate for the layman, which in this subject matter I kind of am. And then this is the opportunity, this is the fun part, because this is live. Anybody watching live, if you want to drop comments, feedback, questions into the live chat on YouTube, we can answer them right here and there. And we'll be doing that throughout the entire episode.
Love it.
Every week. You ready?
Let's jump in.
All right. Well, it's hot out there, Lee.
It is freaking hot.
If only everybody could see under the table where we're both wearing shorts, but it's okay. During a recent heat wave that drove electricity prices to extreme levels and threatened the stability of the power grid in Texas, Bitcoin miners in the state voluntarily curbed their operations. This action was taken in response to the high prices and incentives to conserve power, and resulted in reduction in power usage that potentially aided other essential services like residential air conditioning, medical centers, and municipal water systems. The extent of the shutdown and the precise amount of power saved was unclear, but these curtailments were confirmed by the industry participants and the ERCOT, the grid manager. So what does that mean?
Yeah, Bloomberg was on this. They wrote an article about it when we hit a record high of 80,000 and some change megawatts of demand in Texas a few days ago. We're probably going to hit another record today, 80,300 megawatts. What we saw is participation by the Bitcoin miners to such an extent that ERCOT publicly commented that the miners were being helpful and were following the price signals as they should, which typically does not happen. Typically, ERCOT will wait for an after-action report a couple of weeks before they say, yes, we do have enough data to show that this was helpful. They were able to comment in the moment, which is better than in the past. Of course, we won't know the exact number of megawatt hours curtailed. Currently, there's about 2,200 megawatts of Bitcoin mining in Texas, so there's no possible way that all of that could be curtailed, but we do expect that in the next couple of weeks, we're going to see significant curtailment. Now, some people have used that as an opportunity to say Texas is not the right place to mine Bitcoin. And in reality, this is just going to be part of the mix moving forward. Curtailment is a strategy that will be woven into the economics of Bitcoin mining for the foreseeable future, for decades to come, and it'll become a greater part of the strategy in future. Right now, you may have 95% uptime, 98%. You're only curtailing for a few hours this week, a few hours the next week. But in the future, it could be that from, with so much solar in Texas, our peak or our peak demand, or actually our lowest spread between the amount of megawatts in physical responsive capacity, PRC, and the demand could actually be smallest between the hours of like 6 p.m. and 9 p.m. So that, even though that's not the hottest part of the day, that's when the solar starts to come off. So that actually might be that time frame where miners are curtailing. So it's a good story.
So one of the things that jumped out to me the most was the fact that ERCOT commented, and I'm not familiar with their strategy with media, how often they comment, but it sounded like that was rare that they would do such a thing, like what you just said. But do you think that has to do with the politicking that's out there, and how right now there seems to be kind of like a war on crypto and all things blockchain and Bitcoin and Texas Energy, et cetera?
I think ERCOT tries to stay oblivious to that. I mean, they obviously see it happening, but they put some blinders on and try not to pay attention to that.
So going back to the energy and the heat wave, we were on a call recently with from gentlemen, and we don't need to say where they're from, but one of the things they brought up was like how a place in like a desert that maybe uses a country that uses desalination for their water is potentially a huge Bitcoin mining could be a huge resource for them just because of the battery aspect, because there are points in the year where they have a huge overflow in reserve of energy that's just wasted. So when I heard that, it immediately made sense and how that kind of correlates with Texas, because yes, once every 4 or 5 years, don't quote me, there's a freeze, but every year there's a heat wave.
Yeah. Yeah, and so you have different kinds of demand profiles and load profiles for different regions of the world. Not only is that time of day or season of the year, but as you mentioned, it can also be driven by external factors in the economy, like desalination in places in the Middle East and North Africa. So absolutely, you have a ton of excess power, especially from these generators, or excuse me, these natural gas turbines that are spinning and generating power for desalination for a portion of the year, and then for maybe 9 months out of the year they're less active, and so there's a lot more power capacity that's available. So absolutely, it's a good story to follow, and I think it's going to be the top of mind for Bitcoin miners throughout the world, but in Texas in particular.
In speaking of Texas in particular, it seems like this subject matter, and I don't know if it's because I live in an echo chamber, but this topic is one of the foremost topics that's always talked about. Is it because energy is so unique here with ERCOT, or is it because we have a large Bitcoin mining presence, or is it a combination of all of it?
I think it's a little bit of both, but primarily it's because we're having to push back against the FUD from, I'll say, maybe the radical or the ESG movement, not the ESG movement in a whole. I think there's a lot of people in the ESG movement that are actually pro-Bitcoin and understand how this innovation is actually bringing about a smoother transition to more renewables. But there are proponents within that industry that are trying to shine a spotlight, and so we're forced to respond. And so we need data. Measured responses, data responses. So the more that we get yelled at, the more that we can show data, we'll look like the adults in the room.
And just jumping into the comments, this is a flag to wave to show the ESG camp that Bitcoin mining does in fact help the grid. Can you briefly explain what the ESG camp is?
Yeah, so we've got some comments here coming in, and so the ESG camp, again, like I said, is not completely against this. There's a lot of great ESG Bitcoiners, Troy Cross and Jen Urso and many others. I always use her Twitter handle because it's just easier to remember than Margot. So Margot Paez, I should say, and many others. So what's happening here is the progressive left is looking to have a scapegoat for why the energy transition is not taking place as they surmised. And the primary reason for that is because of the duck curve and the fact that wind and solar are just not base load generation. And they are not capable of meeting the demands of a society. And so Bitcoin mining is coming in there and helping even out and shave off the peaks and bring up the valleys of the duck curve. And that is also, and the location agnosticism of Bitcoin mining is also helpful because you can put it behind the meter next to a facility that maybe was built out for 50 megawatts of solar, but you add that Bitcoin miner as a consumer or a customer right there, and you could perhaps build out double that.
And then you brought up the Tuck curve. Can you, and I've heard you reference it a lot, and maybe I'm just not brave enough or I forget to ask, what is that?
Yeah, so as those on YouTube can see, we've brought up an image of it. The duck curve is describes how the energy demand looks when you chart it on a graph. So we use a lot of energy when we're waking up in the morning, 8 a.m., 9 a.m., and then it curtails off in the middle of the day, and then it peaks quite a bit at the end of the day. And if that matches up with your generation profile, that's great, but it never does, right? Because wind and solar don't follow the same patterns that we do in our daily rhythms. And natural gas is pretty steady, but natural gas generators are having to really eat low prices, low energy prices for those moments when there's spikes in prices, and they make most of their money in, like, it's the whole 80-20 principle, except for natural gas, probably 95-5 principle. They make most of their money 5% of the year when there's elevated prices, and the rest of the time they're losing money.
So appreciate the questions and commentary. It looks like two of these are going to be similar. Ben was asking how's at the grid, and the curator was kind of answering that. I think I'll let you respond, but I don't think ERCOT is ramping up production when they need the power. I think in ERCOT just producing power, and the miners are ramping up the supply, and then they can bring down when they're not needed.
Well, so it's a beauty of a free market when you have a price signal. ERCOT's really not producing power; they're just the grid operator. So they are dispatching power or dispatching their ancillary services when they need people to curtail. They are communicating with generators who are watching the price and generating power when it's economical for them to generate. So Bitcoin miners are also watching that price, and they're mining Bitcoin when the price is low, and then when the price theoretically goes above, say, it depends on the hash price and depends on price of Bitcoin and all that stuff, but when the price goes above $100 a megawatt hour, then they would curtail. Now that is, again, like I said, a moving number.
Right.
It moves minute by minute, but it's in a range of, say, $75 to $250 a megawatt hour. And you might see miners curtailing a little bit later than $250 a megawatt hour because of some hosting agreements that they have. If they're not self-mining, if they're hosting, then they have some agreements, and so that causes them not to curtail. Or because if they're air-cooled, they're worried about their machines, and so they will have that. The price will have to be a little bit higher for them to curtail because of the opportunity costs of curtailing, with maybe a 1% damage rate to machines every time you curtail. That has a significant cost to it. So you need that energy price to be higher. You need to recoup more, either savings or energy credits if you have a forward power hedge. Mm-hmm. In that high-priced environment for you to justify turning off. So that's why the numbers can be upwards of $250 a megawatt hour sometimes.
I think at the end of the day, what I'm hearing is if we really wanted to, we could spend all day, every day, talking about how Texas miners or Bitcoin miners, ERCOT, energy, how they correlate and how it benefits. But
we got 5 more topics.
All right, ready to move on?
Let's do it.
This one got me because when I think of crypto policies and regulation, the first name that comes to my mind is Maxine Waters. She is the chair of the House Financial Service Committee and has reached out to regulators.
Former chair.
Okay.
When the Democrats held power. She's now the ranking member, but Patrick McHenry is now the current chair. Okay.
The former chair of the House Financial Services Committee and has reached out to regulators in a bid to pass a crypto-focused bill to provide a pathway for U.S.-based digital asset exchanges to register with the SEC. Waters sent a letter to SEC Gensler, SEC Chairman Gensler, asking for clarity on how the digital asset market structure proposal would affect the SEC's existing authorities. A similar letter was sent to Treasury Secretary Janet Yellen requesting an explanation on the bill's impact on the Treasury Department. The digital asset market structure proposal, co-signed by Representative Patrick McHenry and Glenn Thompson, is this year's most significant crypto oversight proposal in Congress. The draft legislation aims to approve digital securities, commodities, and stablecoins for trading while providing guidelines for distinguishing crypto-based security from a commodity. What does that mean?
So it's a good question. I met with Congressman French Hill a couple days ago when he was here in Dallas. He is the chair of the Digital Asset Subcommittee of Financial Services Committee, which Patrick McHenry chairs. And I've got a lot on this, but so let me just dive in. There are two components to this bill. One is the market structure piece, and that is a combination of regulatory efforts from the CFTC, which is overseen by the Ag Committee, and the SEC, which is overseen by the Financial Services Committee. And so that market structure would allow for the decentralized cryptocurrencies like Bitcoin to be considered a commodity, and other assets that are newer and not yet decentralized to stay in that securities camp, and they understand they have to be registered as a security. But there is a potential that they could decentralize sufficiently to be moved over to the commodities camp. And then you've got the stablecoin legislation, which is a little bit more straightforward. Stablecoins are a little bit more bipartisan, so we expect that Representative Maxine Waters to be sort of that linchpin in that committee. Most of the Democrats on the committee will follow her lead, and so she signaled some interest in the stablecoin bill. To be sure, we have a little bit of work to do on the market structure bill. So yeah, as that relates to Texas, there's a myriad of implications. Obviously, we want the Texas delegation to support it. There's three Texas congressmen and congresswomen on the Financial Services Committee. You've got Congressman Pete Sessions from Central Texas, Congressman Al Green from the Houston area, and Congresswoman Sylvia Garcia from South Texas. So we're working on all three of them to ensure that they support the legislation. And it's going to take a while, though. It's going to take, it may pass the House in the next couple of months, but to get that through the Senate and Sherrod Brown, the chairman of the Senate Banking Committee, a year plus.
So where do you think all this is coming from? Do you think this is because of like the fallout from like FTX, and because it seems like more and more, and maybe it's just again the echo chamber, but more and more this type of stuff is getting more press, more political eyeballs, and is it because it's people are seeing it and more awareness, so therefore they have to get involved? Because I was again thinking like Maxine Waters, Democrat, like maybe it's just because I live in Texas, but I just don't see. I don't see how they mesh, or it was interesting to me that she was jumping in on this conversation.
Yeah, it really is, and she's a savvy operator, one of the oldest elected officials in the legislature, so she's been there a long time, and her staff knows the lay of the land up there. I think we are in for a long haul at the federal level. We're going to have to continue to rely on the current patchwork of legislation for the next 24 months, right? So what does that mean? Let's support this bill. Let's support Congressman McHenry. Let's push our people on the Democratic side of the aisle to support Maxine Waters to get her over the edge on these market structure bills. But in the meantime, we've got what we need to build in Texas. I saw the comment from BTC Patriot earlier on the YouTube chat that was talking about how do we get Texas to do what El Salvador did. Well, there's a lot of things we can do without Congress. The federal system in the U.S. is a beautiful system. And so what he is asking is, how can we be more like El Salvador? We can't make Bitcoin a currency in Texas, like El Salvador did. But what we can do, and this is an idea that I'll give credit to somebody else. It's not my idea. I'm not going to blast his name out there and dox him, but
it's my idea.
Okay, we'll give it to you then. So there is an idea that we're working on to establish a trust. And this trust would then hold Bitcoin on behalf of the state of Texas. The state of Texas is the beneficiary of the trust. And so the attorneys, when they draft the trust, would list the treasurer or the rainy day fund of the state of Texas as the beneficiary of the trust. And so that Bitcoin is stored in hardware, in cold storage within the trust custody. And then at which point the state of Texas is willing to take custody of those assets, then the trust would bequeath, to use a legal term, if you will, give the funds to the state of Texas, and then Texas would have Bitcoin on the balance sheet. So I saw that question come in from BTC Patriot. It applied to what we were talking about, and I wanted to weave it in.
I would like to also weave in, to use those words, that there's a good opportunity to say that, the TBC is a nonpartisan group.
Yeah.
And often in Texas, because we're in Texas and because Texas is so red, there's a tendency just to assume the TBC is all red, Republican, whatever. Do you want to just spend a couple seconds to talk about why it's important to be nonpartisan as a TBC?
Yeah, it is. I mean, we have more support from Republicans and Democrats in Texas at the moment, but it's kind of unique. We've got support from business-friendly Republicans that are innovative, that want to see Texas remain a state for growing business climate. The microchip was developed and invented in Texas at Texas Instruments. It was commercialized in California. We do not want to see the commercialization of digital assets, Bitcoin mining, all these other things to take place outside of Texas, outside of the U.S., because of a poor regulatory climate. So we are leaning on our Republican allies. We are also working to bring some moderate Democrats into the fold, and we have several. Representative Busey is an innovative Democrat. I wouldn't say he's a free thinker, critical thinker, and he's about innovation. He's about the well-being of his constituents. We've got Senator Royce West here in the Dallas area, Senator Nathan Johnson. There's a handful of state reps and state senators who are Democrats who are also supportive. So our loudest critics in Texas are not the Democrats. Our loudest critics are Republicans that don't understand this technology yet. So that is the unique nature that we're seeing. And it's different than other states, but you have to be able to communicate well and grab people from both sides of the aisle and knock them together and say, hey, let's get some stuff done.
And I think that's a major value proposition of the TBC is its ability to educate policymakers. So if you are connected to somebody in your county rep or whoever in your municipality or Congress or a representative or anything, and you need to educate them, contact Lee, the TBC, and I'm sure we can get somebody out there to educate.
We'll get people, we'll get resources. We walk around the halls of the legislature all the time. We're happy to provide you support.
And it's interesting because you just said something that would be a great segue to the next topic, but I do want to, because I want to make this live, because this is live and you want to make it interactive, I do want to, Amy was bringing up about the securities and commodities, and now this chat's going so fast.
Too many questions coming.
No, we don't say that. There's just enough. We need more. Digital assets could have traits of commodity and security. They don't always fit nicely into the bucket. Is that accurate?
Oh yeah, absolutely. I mean, it's a spectrum. So Bitcoin is the most decentralized digital asset. Ethereum is probably the second most, and then it goes to less decentralized after that. So Bitcoin is clearly a commodity. Ethereum is at one point the SEC said was a commodity, and now they're waffling on that a little bit. And then pretty much everything else needs to prove that it has sufficient decentralization not to trip up the Howey test. And the market structure bill that Patrick McHenry has authored alongside some colleagues like Congressman French Hill and others would provide a framework for moving from a digital security to a digital commodity.
But we need to move on, but I do want to address the 30 seconds AI blockchain innovation. Do you have any comments on that, how they can integrate or how where have you heard that it's moving it forward?
Yeah, I mean, AI has got a lot of attack vectors. So blockchain in the sense of sort of the technological sense has some securing capabilities within consortia. Now, if you have you're just training an AI algorithm and you don't have other parties in the mix, adding blockchain is just going to slow down your GPUs as you're training the algorithm. So it's not a nice fit, but it is a nice fit when you have multiple parties and you have to have that layer of consortium that needs some permissions within the data structures. And of course, you see a nice complementary function between AI and Bitcoin mining. Bitcoin mining went from CPU to GPU to now ASICs, application-specific integrated circuits. AI algorithms are currently being trained on GPUs. They were on CPUs before, and eventually, it is my hypothesis that that certain AI algorithms will be using ASICs, application-specific integrated circuit microchips, to harness the computational power necessary for that kind of AI model training. So these models are only growing in importance to society. So I do think there's a lot of parallels between on the mining side and the model training side. And then you also have the technological blockchain side that integrates in.
Mm-hmm. So getting back to our segue of America and the microchip house in Texas, Riot Platforms, which is a big supporter of the TBC here in Texas, is the largest public U.S. Bitcoin mining company. They have announced a significant partnership with Bitcoin ASIC manufacturer MicroBit. Is it
MicroBT?
MicroBT. I'm sorry, dyslexia. This combination will bring the production of MicroBT's ASICs to America, which is a significant development in the country's Bitcoin industry. A notable aspect of this partnership is the anticipated growth in Riot Platforms' potential for self-mining hash rates. Following the complete installation of the machines from this order, Riot's self-mining hash rate capability is expecting to increase by approximately 61%, reaching a peak of 20, was it exahash?
Exahash.
61% increase sounds insane because they're already massive.
They are, and that increase is going to put them, all of the miners are increasing their exahash numbers. Riot is in the top 3 with Core, Scientific, Marathon, and then of course Riot. So this is a huge announcement. I'm imagining a lot of these machines are destined for their Corsicana facility that's already under construction. Very cool that they're being developed in the United States. MicroBT, I think, is the less villainous of the two. Bitmain and MicroBT, the two manufacturers of ASICs, and there's also Canaan, which is a close or is kind of a small outfit, but they produce good machines as well. Really excited for the Riot guys. This is a big announcement. This is a huge order, a lot of money. They are gearing up for the halving. They've got low energy prices because they're here in Texas, and 20 exahash would be a big number for them.
So why is that important for MicroBT to move that manufacturing to U.S.?
It's important for a lot of reasons. Politically, it helps. We have a lot of investors here in the U.S. for these publicly traded miners, and they like to see that these machines are being manufactured here in the U.S. They're avoiding tariffs, right? Because there's a tariff on China. Currently, a lot of these machines are manufactured in Malaysia and other places, so they avoid the tariff anyways. But if they were manufactured in China, they would have that 27% tariff. It's important for job creation in rural America, which is really where we can progress and move the needle for elected officials. So lots of importance.
Does security, because I know we talk about, well, not today, but there is talk of national security and how blockchain and Bitcoin can affect that. Does this play into that at all?
It does. I am not of the opinion that these machines are a threat because they are not like exposed to a variety of networks. They're sort of on an internal network, and they're just communicating to the Bitcoin blockchain and just passing on that hash rate. So it's not a threat from a cyber perspective per se, although Bitcoin mining companies do have cyber threats. Those are more coming in to try to redirect hash rate and steal hash rate. But from a national security perspective, the biggest threat is to the infrastructure, the electrical infrastructure. And so having more Bitcoin mining in the U.S. that is more controlled and more nuanced and operates with more flexibility in U.S. grids is a national security imperative. And if we were to push this overseas, of course, jobs, revenue, this incredible energy innovation, I think actually the energy innovation for Bitcoin mining compressing the duck curve in power grids across the country, but especially in Texas, is actually more impactful in the short term than everything else. But people don't understand that, so we got to talk about jobs, and that's really jobs and tax revenue that the miners are bringing. But in the short term, the compression of the duck curve is huge. In the long term, having all this Bitcoin, which will be in the basket of reserve currencies one day in the U.S., is going to be quite helpful for prolonging the dollar as the world's reserve currency.
And this isn't relevant to this conversation, but I do want to shout out to Mike Mills, and because he did bring up, he was asking, how is the TBC working on, are the TBC working on legislation regarding blockchain uses in other state areas like real estate? One thing I would like to say is a short plug. We just announced yesterday we are doing an event in North Texas at the Frisco Star Cowboys Club on August 3rd. We're having a lunch, and it's real estate tokenization. It's brought to us by Break
Chain Capital.
Break Chain Capital and Cap Block. And we just announced it yesterday, but it's going to be a lunch to network and talk about tokenization in real estate. But
and that's a nice facility there at the Cowboy Star. Beautiful facility.
Yeah.
Are you a new member?
I am.
Oh, okay. You wouldn't get it. Ryan Harper, a new member of the elite Dallas Cowboys.
Listen,
Star
I had
Club.
lunch there yesterday with Paul, and you know who we sat next to? Randy Travis.
Randy Travis. That's pretty cool, actually.
Thank you.
Almost worth it.
Oh, yeah. But yeah, I don't know if we don't have any questions about the American ASICs. I do
Talk
think
about the real estate thing.
Well,
that Mike asked.
Oh yeah. Sorry.
Well, but Mike, join us at the event, I think is what you were saying. But also really quick on the real estate. It's been a promise of blockchain technology that real estate tokenization is going to, revolutionize and bring greater liquidity to an asset class that is traditionally illiquid. Mm-hmm. And that has not yet really materialized because there's not really an ATS because real estate tokens are securities. There's no question about it. So it's got to be traded on an ATS, or you tokenize it and trade it under a Reg D exemption with accredited investors. There's other ways to do it actually, but if you want to offer it to the general public, it has to be on an ATS. So I think that amongst accredited investors outside of the ATS platforms, that's where we really will see it. I know we've only got like 4 more minutes.
We've got 9.
So I'm going to cut that off and let you keep going.
Yeah. So we just got 2 more topics. In the next one, we're talking about banking and integration for Bitcoin. Caitlin Long, a prominent figure in Bitcoin banking, also a speaker at this year's summit, has a 22-year Wall Street background, has been working tirelessly to bridge the gap between traditional banking and digital assets. She is the founder and CEO of Custodio Bank, which is currently seeking Federal Reserve status for digital asset banking. Despite facing opposition, Long continues to fight for this cause. She believes that attempts to suppress Bitcoin will ultimately strengthen the network by pushing it into the shadows, making it more globally distributed, resilient, and less controllable by the U.S. policymakers. As a new asset class, Long notes that Bitcoin and other digital assets present a unique challenge for regulators, particularly due to irreversibility, which is a departure from traditional banking practices.
Caitlin's a good friend. I've walked the halls of the Texas Capitol with her, introducing her to different legislators, and we're very much in support of Custodia's lawsuit that Wyoming filed an amicus brief for that against the Kansas City Fed, which is one of the branches of the Fed, and so. What we see here is someone like Caitlin who's trying to do it the right way, but meeting opposition from bureaucrats within sort of the apparatus of the state that are taking their signals from the current administration, which is not favorable toward this kind of innovation. The banking industry does see the writing on the wall here, and so. I think it's going to be silly when we look back in 5 or 10 years to think about the fact that this was resisted so strongly. But if she continues to persevere, I really hope for a positive outcome. The law is on their side. I've looked through the briefs. I've looked through the filings. I'm no lawyer, but I've had lawyers look through it for me and tell me that the law is on their side. And so that's why we're very supportive of Custodia.
And how does that affect, what impact would that have in Texas? or for Texas?
Well, it is a battle between federal control and state control. And Texans, as you guys know, are really about the ability for states to, within the constitutional limits set by the 9th and 10th Amendment, for states to assert their authority where it is granted by the Constitution. And in this particular case, and the U.S. Code actually comes in here as well, the state of Texas and all other 49 states are permitted to charter banking institutions, and the Fed should give those institutions Fed accounts. So if you have a charter from a state, you get a Fed account, and then you're duly regulated by the OCC, FDIC, and the state banking regulator, which is the Texas Department of Banking in this case. Well, in Custodia's case, it's actually the Wyoming Department of Banking. But the fact that the Fed is refusing to give Custodia an account for a legally and lawfully chartered bank is an encroachment of federal power on state authority. And so Texans do not like that. And so we're going to continue to fight for her and Custodia and all the shareholders, their rights to get a Fed account, because it's not right that they don't have one.
So moving right along, we have two more stories. We have the HSBC with the ETFs and the impact it has with like Fidelity, or we have Prime.
Let's go with Prime Trust.
We'll skip HSBC. And so skip. That's what I was asking.
Yeah,
Which one do you want to skip?
Let's go with Prime Trust.
So Prime Trust, Nevada's business regulator, has reported that the financial state of Prime Trust, a crypto custodian, is critically deficient, leading to an inability to honor customer withdrawals since June 21st, 2023, which was 8 days ago. A cease and desist order was issued alleging that Prime Trust was breached in its fiduciary duties by failing to safeguard customer assets. The company has 30 days to respond to the order. Meanwhile, is that Bonk? B-A-N-Q?
Yeah.
Yeah, Bonk. A payment, I don't know why I have to say it like that. Meanwhile, Bonk, a payment subsidiary of Prime Trust, filed for bankruptcy protection on June 13th, and BitGo, a wallet infrastructure provider, decided to cancel its acquisition of Prime Trust on June 22nd, 2023. Let's get into it.
Not good. Not good. Prime Trust was the back end for a lot of services. I won't list them all out here because they have all found new institutional custodians to help with their back end services. But it is unfortunate that a trust that is required to hold these assets in trust came out with an imbalance of assets and liabilities, and I think it's pretty significant. They have like $2 million in assets and $80 million in cash liabilities and like $800,000 in crypto liabilities. So not a good ratio, and it should never have gotten to that point. Maybe not a big deal if you have $10 billion in assets and $10.8 billion in liabilities. That's still not how, I mean, as Caitlin Long herself would say, that's still a little bit of leverage, and that does not mix with the digital asset industry. So not good. It's not a good look. Thankfully, it's nothing compared to, it's very much scaled down compared to FTX, but it's still unfortunate, and we need a little bit more visibility and transparency from these institutions, trusts, exchanges, et cetera. And that's why we helped to research and write House Bill 1666 in Texas that requires a proof of reserves attestation by a third party submitted not to the general public, because maybe that's a little bit too intrusive and too much regulatory oversight, but at least to the Texas Department of Banking.
So this is very recent. What is the potential fallout?
Pretty limited, I would say. I mean, $80 million, it sounds like a lot to you and me, but in the grand scheme of things of a $1.3 trillion market, it's not that significant. And they don't have a lot of, there's not gonna be a lot of forced selling from this because they only have $800,000 in crypto liabilities. So there's probably going to be a bankruptcy. BitGo saw the books and said, "Hey, we're not going to move forward with an acquisition," kind of like Binance did when they were looking at FTX. And so I don't expect massive fallout, other than just like another little bit of a jab in the side.
Yeah, but it seems like it's a smaller jab.
It's a smaller jab. Yeah.
So if these situations continue, but they're smaller and smaller, then you just have that long tail of, maybe it's a pinprick by the end of all the pain.
Yeah, I hope so, and I hope this is the last of them, because we've definitely weeded out a lot of unsafe and unsound business practices, and you're just going to have more leverage, remove the leverage. I realize I said more leverage, but what I meant was more removal of leverage in this industry. So it just doesn't mix with an asset class that's so volatile.
When something like this happens in Nevada, and is that kind of like a lesson learned for the other states? Is it lesson learned for more of the national level? Is it a lesson learned like Maxine Waters and her group can look at and go, oh, okay? Is it more of a learning situation than anything? Because like you said, 80 million is not, again, 80 million to the people that are losing it or have lost it, that's huge, but for the industry as a whole.
Yeah, I think it can serve as a lesson learned in a sense that FTX served as a huge, just like fraud that is going to change the industry forever.
Right.
This is probably just a blip on the radar relative to that. And unfortunately for the customers that were affected, it's going to really hurt them. But I think the lessons have been learned. This was just sort of a lagged effect of the recent winter and market downturn that we saw. And so we've learned the lessons. We're just moving forward.
So that brings us to the end of this. Congratulations, you survived. I've been trying to do this for you for like 2 years now. Finally convinced you to do it.
And we're doing it, and we're going to do it every week.
Right.
So we'll be here every week. For those of you that chimed in on the chat, we're appreciative. For those of you that were on Twitter Spaces, sorry we couldn't interact as much. Join us on YouTube next time.
Yeah. Is there what's going on? I know you have a webinar in 15 minutes. What else is going on currently this week or in the news with TBC?
Yeah, I mean, I'm thinking about the summit. It's not this week, thankfully. It's in November, but
Right.
We are heads down getting ready for the summit, getting speakers, sponsors, getting everything lined up to make that a high impact event. A lot less buzz and retail and fluff, and a lot more impact.
Well, that being said, I'm going to finish the rest of this because I promised you and Mark that I would have you out at 10:45. But I just wanted to give a couple of last-minute summit notes, last-minute, hey, programming notes. But you are more than welcome to head out, sir. Thank you for being here. That's you can go. Or
I'm bouncing.
There you go.
I got to go to my next.
You
my
need
next
to go
thing.
because you don't need to hear what I'm about to say.
Uh-oh.
Because currently we have a July 4th promotional going out. And every VIP ticket holder from now until the July 4th will get a 30-minute call with Lee Bratcher. So if you order a ticket for the summit right now, between now and July 4th, you will get a scheduled call with Lee. Obviously, Lee's busy. He just left because he has another appointment. And your call may not be today, but we'll get it on the books in the next upcoming months. Additionally, if you get a general admission ticket, you will have, or general admission or professional ticket, you will have the opportunity to get an upgrade to VIP. We'll have a contest, and we'll select one of those to be bumped up to VIP. The general admission, if you did a GA ticket in this promo, you will also get access to the VIP networking party. So that's the summit promo. I hope you come. I hope it's going to be an amazing event. The summit is a B2B enterprise event for Bitcoin, blockchain, energy, policy, and fintech. It's enterprise, it's B2B. The way I like to describe it is a intersection between NAPE, consensus, and Bitcoin all in one spot. So hopefully you like this programming. Hopefully you like this opportunity to bring Lee in and have a little bit, I don't want to say dressed down, but a little bit more, hey, let's just have a conversation about the industry and what impact it has on Texas. And we'd love to see you next week. Make sure you're liking us. Make sure you're subscribed to the channel, and make sure you click on notification bells. And we'll see you next week. Thank you.